All right, welcome to today's update. We are just about to get started here. Let me make sure everybody is connecting okay. We're looking good. So let's go ahead and get started. Welcome to today's update for the first quarter of 2023. It's kind of fun. This is the very first quarterly update for this account. So I'm excited to be here and I appreciate you taking the time to be here with me today. So if you are new here, my name is Eric Hagan. I'm a financial advisor. I am president of the independent wealth management firm Capital Consulting Group. I put $25,000 of my own money in the stock market, and I am working to grow it to $1 million. Instead of telling you what you should do with your money, I am here today to show you exactly what I'm doing with my own. And I invite you to follow along on my journey, again, at investlikeeric.com. So if you'd like all the details, and to learn how you can copy exactly what I'm doing with my money, again, visit me over at investlikeeric.com. So one of my goals with this is really just to provide complete transparency into what I'm doing with my own money. So today I'm going to report on the first quarter of 2023 to show you kind of how things are going. My goal really is to provide full transparency. So we're going to look at performance, how things are going. We're going to look at risk metrics, holdings details, allocations, things like that. So that's kind of the goal today and what we're going to be talking about. This is going to be a short presentation, so I hope you will stick with me until the end today. All right, so let's dive right in here. So right now I am basically fully invested. You can see that I have, let me pull up my highlighter here for you. You can see that I do have a little bit of cash at about 2.33% cash. That's basically some extra deposits that came in. I'll get into that here in a minute. But for the most part, fully invested. I have not sold anything to get out of and reduce exposure. So just about fully invested. That comes with a risk score of 85 on the account. So the scale is 1 to 99. 1 would be kind of like cash in the bank. 99 would be about as aggressive as you can invest in the stock market. So this portfolio right now comes in at an 85. What that means to help set some expectations, because accounts do go up and they do go down. What that means is that I have a 95% confidence that over any 6-month period of time, I can see my account drop down to a total of 20% or increase by a total of 27%. So that's kind of the range of outcomes over any 6-month period of time that I can expect. So that's the roller coaster, right? We can see that the stocks I am in are paying a 1% dividend right now. So a nice round number there. That's essentially the cost of this portfolio. So all of the trading, all of the management, everything, statements, online access, everything costs about 1% per year on this account. It is a fee-only account. And so nice to pick up that 1% dividend. You think about it, that's basically paying all the costs associated with doing this, because I am fully invested in individual stocks, no products, no mutual funds, no ETFs, nothing like that. And so, as you can see, there is zero expense ratio in any of the or associated with any of the investments that I am in. Again, all individual stocks. All right, moving on to sector weighting. So heavily weighted, or most heavily weighted in technology. Do have 45, almost 46% invested in technology stocks. The next weighting would be industrials. About 11% is invested in industrials. Then we have consumer cyclical, financial services, healthcare, energy, and so on. From a regional exposure, I am 100% invested in US companies. I do not have any international exposure at this time. And you can probably recognize that most of these companies, these are all the companies that I am invested in right now. So again, probably recognize most of these. There are 30 individual stocks. Some of these stocks have done well this quarter. Some have not done as well this quarter. So this slide, I'm showing you the top 5 winners and the top 5 losers for the quarter. So again, January 1st of this year through March 31st of 2023 here. So top 5 winners: Meta, we're up 55%. Salesforce, I'm up 50%. Fortinet, almost 36%. Applied Materials, almost 35%, and then Apple just a hair over 27%. Um, Show you a balanced approach. Do have the losers in there. So the top five losers for the quarter: Eli Lilly down almost 6%, General Dynamics down about 7.5%, Chevron down almost 9.5%, Northrop Grumman down just a hair over 20%, and then Schwab getting caught up in the banking debacle, down 36% for the quarter. So you take all the winners, you take all the losers, you put them all together, and what is the net end result? And that's what this slide is designed to show you. So like I said, I put $25,000 of my own money into this account. This was in 2022. We did see declines in 2022. So the account at the beginning of this year on January 1st was valued at $24,143. I am adding $100 a month into the account. So that's why you see that $300 right there. And then the account grew by $2,766. Now, this is net of any and all costs, which I'll get into here in a few minutes, a little bit deeper. So I ended the quarter at $27,208. When you factor in all of that, starting value, additions or withdrawals, in this case, just $300 of additions, and then the gains net of any costs, we get a net return of 11.36% for the first quarter of 2023. If we want to go into a little bit more detail, what this chart is showing, if you're watching on your phone, I apologize, it's probably a little bit too small to really see, but this chart is showing how the account did by week. So down the left column are all the weeks of the quarter. And then what you can see is where the account started, the value that it started at that week, the value that it ended at that week. This is where you can see the $100 deposits, those 3 deposits going in at the beginning of each month, and then the change in value in the account throughout the course of that quarter by week. So first week was up $93, second week up $575, third week down $83, and so on. At the end of the quarter was positive by $2,766, and that's how we get to that 11.36% return for the account. Now, how does this compare? How does this is this a good performance figure or not? The best way to understand that is to compare it. Most people would say that the S&P 500, which is an index of 500 U.S. companies, most people would consider that index to be the best representation of how the overall U.S. economy or U.S. stock market is doing. And so here I am comparing it to the S&P 500. However, you need to know that it is not possible to invest in the S&P 500. Yes, you can invest in funds, ETFs, mutual funds, things like that, that do track the S&P 500, but that it is impossible to actually invest in the S&P 500 itself. So that being said, comparing 11.36 to the S&P 500, the S&P 500 was up 7.49% for the quarter, which means that the 30 stocks that I'm in, we were able to outperform the S&P 500 by 3.87%. From a dollar perspective, what that means is that while my account ended the quarter at $27,208, had the money been invested exactly in the S&P 500, which again, you can't do exactly, but the S&P 500 itself would have been valued at $26,265. So you can see we're almost $1,000 above the S&P 500 on just a 25,000 or so dollar account. So love to see that. Good quarter, very good outperformance. Very pleased and very happy personally about that. So again, this is a net return. Like I said, I did pay an advisory fee for this. This fee covers everything associated with the account, all the trading, all of the management, all of the custody, the statements, online access, everything costs about 1% per year. So again, this is a net return. My fee for the quarter that my account was billed was $59.54. I will be giving that away to charity, as I've mentioned in previous presentations. But the 11.36% return, again, is a net return. So we can feel good about that return. All right, so that concludes today's update. I said it'd be short, so thank you for checking in with me. If you have any questions, please do not hesitate to reach out. I will post this update on the website on investlikeeric.com. So if you want to come back, watch it again, if you want to share it with a friend, anything like that, please note that it will be over at the website here shortly. My intention, of course, for these videos is to have them live on the website for many years into the future. So if you are here years after this video was made and you're watching this, welcome. Thank you for checking out the journey as we continue to progress here with this account. So again, thank you for being here today. And again, for those of you that are new here, checking this out maybe for the first time, my goal is to grow my $25,000 account to $1 million. If you would like all the details on exactly how I'm doing this, and if you'd like to learn how you can copy what I'm doing with my money, again, head on over to investlikeeric.com. So again, thank you for being here today. That concludes today's message, and I will sign off and wish you all a wonderful rest of your day. Bye, everybody.